Yeah, thank you very much for giving me the warm welcome. Actually, I really enjoyed the recent panel discussion, to be honest, because last time that I was here, I spoke about co-opetition. I was on the keynote, we had a keynote as well, and we presented, well, if you want to make something in the space, you have to cooperate with the others, but you have as well to consider that you're competitors. And this co-opetition framework and co-opetition idea is, of course, lovely to see that the panelists as well talked about it. However, I'm here because we have continued to work on our co-opetition model, and there is something more that I want to share with you about the influence of the Bank for International Settlement in the area of DLT adoption. I'm Jonathan Leßmann. I'm the Chief Marketing Officer and Head of Platform Strategy at SWIAT, a joint venture formed by Standard Chartered, LBBW and Deca Bank. Hence, we have a very strong focus on institutionals and banks, which is why regulation is even more important for us. So, I guess you all know the Gartner hype cycle and where the hype technologies are on the cycle and when we go into production. And when we look at it, what the Gartner hype cycle is reporting for blockchain technologies says, well, currently we are in the throes of disillusionment, meaning it still needs 2 to 5 years until we get mainstream adoption of blockchain layer 1 solutions in the broad range as we know it. So what is missing, right? We all hear about regulation. We all have to just join in the form of a co-opetition, but we made a very brief summary of, well, what is missing and what we hear always in the market. And what we hear is, well, you know what, regulation is missing. But then we looked at it and said, well, honestly, that's not correct. Because we have a regulation in France since 2019, in Germany since 2021, in Europe we have the DLT pilot regime since 2023, and in Spain this year we had the new Securities Market Act as well. Then we hear, well, it's payments, right? Wholesale payments, there is an issue because we don't have any form of payment without any issuer risk. Well, actually, again, that's not true anymore because we're getting the DLT sandbox of the exploratory toolbox of the European Central Bank, where financial institutions can sign up with us, for example, and say, well, let's do a digital security and settle it against European Central Bank money. And then, well, we still don't see the synergies in the market because we are platform driven, meaning we need network effects, we need counterparties to interact with, etc. And ultimately what we see in the market is a lot of different islands being created and everyone waving at each other and saying, hey, I'm on this island, come over to me, this is a really cool solution that I have, right? And what we see is, well, that's all solvable, right? We have the regulation, we see on the horizon already there is a solution for payment, and the last part, well, that's on us, right? And we see the Bank for International Settlement now coming in the lower part, on the aspect of the blockchain infrastructure itself. When we had a look in our strategy department on how we want to approach the conundrum of getting into scalable and production, we saw, well, on the blockchain application layer, on international and national regulation, on services providers and DApps, that's all fine. But no one is actually looking at the tech that we're using beneath it. And this is now happening by the Bank for International Settlement, which is making recommendations for how you should evaluate from a risk perspective and capital treatment requirements for a financial institution if you use a certain technology or if you do certain trades. And this is definitely a risk-driven approach. And I want to have a very short look right now into this risk-driven approach, and of course this paper covers much more than I'm about to share, but this is our very brief summary about the way how the Bank for International Settlement is thinking about risk in technology itself. So today we are over here, right? We have the centralized setup where a financial institution has maximum control over its technology stack, right? It's all in control. Regardless of the application and on the infrastructure, it can change everything on its own. But if we now move a few years forward and have a look into the future, right? What we hear as well at the convention a lot is, well, we will have a DLT-based infrastructure. Meaning, as a financial institution, I'm still in control on the application, on the service that I'm providing my customers, meaning financial services. However, I have to evaluate the dependencies that I'm getting in my technology stack, because now I'm depending on other actors, right? For example, to run a validating node, that the network is always up, that the network is available. What happens if the network has a congestion issue? Who is going to solve that for me, right? So there are a lot of questions around it that BIS treated and talked about, and they said, well, you know what? We do have regulation for that already. And we think this should be applying as well to blockchain as we know it. And that's the second part. In essence, if you get in more dependencies in your setup as a bank via blockchain and DLT, you should evaluate that risk and assign certain capital requirements to it if you cannot solve that risk, which is a pretty straightforward logic. Ultimately, and unfortunately, for a lot in the market, and where we still see a lot of ideology moving around, is this basically kills permissionless. Because the requirements set out in the Basel standard says, well, you need a clear governance about it. You have to address outsourcing risks, right? You have to address all material risks, etc. And as soon as you cannot match one criteria of us here, you have to apply additional capital treatment of 100% and 1,250% of risk-weighted assets to the asset that you buy, regardless if it's a bond, a share, or already a MiFID instrument. And what they truly have in mind is, again, and I love to connect my last keynote with today's keynote, last time I spoke about why the Terra Luna blockchain got stopped by its validators, right? You all remember Terra Luna, the stablecoin? Well, they were making losses, so they decided to stop. What's the legal foundation? How can I now approach them and say, well, that's not right? Well, that's a setup a blockchain-based ecosystem for financial institutions cannot rely upon. Hence, a clear governance and rules are required. So, what does it take to truly scale? And I copied that slide from last time. We need scalability, interoperability, and regulatory compliance. And if you have stayed around as well from the previous panel discussion, you might have heard those keywords as well. Maybe from other people, but we heard it. And how we treated this is quite easy. We have set up a co-opetition layer for a unified ledger. As well, a recommendation by BIS that we are again having in our minds and working towards too. So we have the foundation layer where we are cooperating, right? Where the financial institutions are running validated nodes, are joining a network, are signing network terms. They have legal obligations towards each other. And on top of that, we have the competition, right? So we have multiple software developers that could develop and deploy their own software and offer it. And we have financial services providers that are, of course, competing because they have the same financial services offering. However, what we achieve by this, by working on a unified ledger and working on the same set of standards, is we achieve scalability because we separate the infrastructure component from the application layer. And on the interoperability aspect, we are using the SWIAT framework to ensure standards. And then regulatory compliance, this entire ecosystem has been designed in such a way that all regulatory requirements have been considered. Right? We consider that on the technology level, we consider them at the DApp level whenever we develop software. Because we have quite a strong financial background in that, all of that. So what is emerging? What we see is a financial ecosystem emerging already, where we do have already quite a strong support. And I only have listed a few on the support that we have here. We're supported by Standard Chartered, LBBW, and DECA. Of course, our shareholders are running validated nodes as well. They're participating in the ecosystem and they're driving it forward and they are onboarding their own clients. For example, in Germany, we have gone into production already and savings banks are getting refinancing based on blockchain. This has already been made public. We are working together with strategic partners and our validators, Adesso, GFT, Soprasteria, and Think Tank. And they all promised to deliver a certain performance by running validating nodes and by keeping the system up and available. So again, there's a clear relationship and clear requirements set out towards each other. So maybe as a very brief summary of what I'm presenting to you today is you have to consider the financial ecosystem and what it needs. Meaning, as well, the technology introduces, because it is decentralized and we want it to be decentralized, we have to consider as well its risks and contingencies that it brings with us and with it. And this is exactly what we have designed SWIAT for, so that you can deploy your own solutions on top of it, that you can use that ecosystem to be compliant with the risk requirements that we have set out there. And maybe jumping, and well, what can you do with it? How can you join, right? So there are several options on how to join the SWIAT ecosystem. And one is, of course, you can become a participant. You can use the DApps that we have available, for example, on tokenization, primary markets, or as well on securities lending and collateral management. Then we have as well the opportunity to onboard further strategic partners like GFT or Adesso if you want to provide a certain or key element of the infrastructure component and says, well, I have a value add that I can add because I know the financial ecosystem. I know what I can contribute to create a true holistic financial place blockchain ecosystem, right? Our aim is to have a holistic financial industry ecosystem on the blockchain. And of course, it's then when you say, well, maybe I want to run my own decentralized application because I want to offer my own financial services, then of course, we are open to discuss and open for questions. And if we don't have the time here to answer any questions, we have as well our booth over there, and we are looking forward to seeing you there. Thank you.